Hi everyone, this is RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. And this is my market situation report for Saturday, February 2nd. And I want us to take a step back and just kind of get a point of view. And I do this every once in a while. January is finished for 2013. It ended fairly good. There's a saying in investing that how January goes, the rest of the year goes. Though there's always the exception to that. And if there's ever going to be an exception, it would be any of the next 5 or 6 years with the incredible amount of money printing and intervention and manipulation. But what I want to kind of step back and just look at is just to point out that we're always investing. And kind of the theme, though not necessarily the title, is everyone is an investor. And the reason I say that is because there is no such thing as not investing. If you have money, it is being invested somewhere. It is always being invested somewhere. And let's just look at what some of these investments have done over the last 10 or 12 years just to give us the big picture again, because it's so easy to lose the big picture when you have 24-hour-a-day cable shows, TV shows, blogs, print, news media just hitting you and slamming you with data. And so I think we should step back and not only say, hey, there's nowhere to hide, meaning we can't step aside, and more importantly, let's just keep kind of the really big picture in view. And so let's do that right here. So right here, this is a price chart of the S&P 500. I'm just going to call this stocks. One of the places people can invest is in companies, publicly traded companies or private companies, but I'm just showing a price chart of, publicly traded companies, 500 of them here. And if you notice on the line here, since 2000, that is a mean reversion line. It's slightly going up. So it is going up over time. The thing is, inflation's probably going up over that time faster, and there's just an incredible amount of volatility during that time period. So yes, stocks are going up slowly, very slowly, but I think if we look and adjust for inflation, it will be flat to down. So stocks is a place we can invest. I don't think it's one of the better places to invest if we're just kind of generally going to buy and hold or buy and forget, which is a strategy I do not believe in. The second place that people can invest their money is they can lend money to other people, which typically are bonds. I mean, you can lend money to people you know. When you buy a bond, you're lending your money to the U.S. government, a corporation, a municipality. And the price chart I have on here is the 30-year U.S. Treasury note, and it's just actually showing the yield. And I just want to show that the yield's been falling for the last 12 years. A lot of this is because of Bernanke's money printing, wanting to push down the yield on interest rates, wanting to get it down to zero, wanting to force people out of bonds, out of quote-unquote safe investments, and push people into the stock market. He actually smirked when he was interviewed in the past that, hey, the stock market's going up. And I'm just kind of nervous for people who think bonds are safe, because bonds aren't necessarily safe, though that's what people think. We are finishing up it's about 33 years we've been in a bond bull market. When the rate falls, the price goes up. We maybe have 2 more years left of this, but there's definitely more downside in the price, which is more upside in the yield. And so if you're buying a bond now with a 3% yield and then the yield goes to 4 or 5%, your principal is going to get crushed. So bonds are not necessarily a safe place, but that's the second place people can put their money. The third place people can put their money is in their currencies. Now, I'm not going to bring up all the currencies. The largest printable currency in the world is the US dollar. A lot of other currencies in the world move off the US dollar. You can see the mean reversion line, and it's falling. But also notice from 2008 or maybe mid-2007, the US dollar has kind of gone sideways, and I think that's going to end pretty soon. And the reason is, since the 2008 meltdown, a lot of other people in other countries have gotten concerned, and when people historically have gotten concerned, they have bought US bonds, which is almost the same thing as buying US dollars. But that will change. That is going to change. And if you notice the direction of this printable currency, the US dollar, it is down. And when it resumes its course, it will continue to be down. And the reason I have more confidence than not in that is because we're in a new age where the GDP growth of the US economy is not going to be 3 to 4%. It's going to be 1.5%. And so we need a cheaper currency to help our exports. Well, so does Japan, so does Europe, so does Great Britain, so does everyone else. So we're going to stay in this devaluation war mechanism for quite some time. But I would not say having your money in US dollars is setting your money aside. It's not. You're invested in US dollars, and I don't think that's necessarily the best thing to be invested in. The other currency I wanted to just show was the non-printable currency. There's two non-printable currencies in the world. I'm just showing one here. This is a price chart of gold from the year 2000 to today. And generally speaking, it's going up. There's some volatility to it. But if you compare this, just memorizing what the other price charts look like, much less volatility than the stock market, much less volatility than printable currencies, much less volatility than bonds. And so I want us to keep the big picture in mind that this is happening, this is going on, and a lot of people are going to miss this until the end, when it's so obvious that they can't avoid but get in, and then it will probably be too late then. And then the last thing I want to show is you can invest in physical assets. Now, there's no really good price chart to represent all physical assets. Commodities and housing, which is physical assets, and apartment buildings and diamonds and rare artwork and wine. I mean, those are all physical assets. But what I want to point out and what I want you to notice is the mean reversion line is going up. And it's going up at a stronger rate than what the stock market is going up. And yes, there is huge amount of volatility, that huge drop in 2008. The majority of that had to do with oil and gold, though gold ended 2008 higher. So what I just want to say, if I was sitting next to you, we sat down and we were speaking, I would say just keep looking at the big picture. The short-term noise is noise. It's never going away. It's going to increase. And if you keep your kind of eyes on the prize, that is the big picture. And the big picture is non-printable currencies are going up. And you got to have a strategy to know when to be in, to be out of the market. And you have to be able to tolerate doing things sometimes that the masses are doing or are not doing. And that's just how things work in the world. So I'm glad you're with me. I hope this is helping you. We have the monthly strategy gathering coming up on the 12th. So that's just around the corner. Live extensive Q&A. We're going to do speed investing. Of course, we're going to be looking at stocks, bonds, commodities, currencies, real estate. And it's such an important time because the S&P wants to hit new lifetime highs, and $2 trillion a year of printable currencies between Bernanke and Obama's deficit. And yet, I don't know, it wants to get there, but what's going to happen when it gets there? And this is not a time to be complacent. This is a time to be very clear on what your strategies are. So please join me then. If you have interest in knowing more about our work and what we do and what I do to help people protect and grow your money, please check us out. I look forward to speaking with you guys next week. Y'all take care.